Good afternoon, traders. It's Bill Baruch with Blue Line Futures and it's your daily midday market minute. Big, hot jobs report. 943,000 jobs were gained in July, and big wage growth, 4% year over year. Overall, too, unemployment rate that dropped 5.2 to 5.4%. So this is a big number, and it really forces the Fed's hand. And kind of what we talked about on the Morning Express today. A number like this, it's not over 1 million, but it's within that year, within that range. And what it's going to do is help the markets. It's going to support risk assets in the manner that they have been. Fridays have also been friendly. We would expect cyclicals and value stocks to outperform as they have. The Nasdaq is trading lower. Overall, I would be really surprised to not see the market sell off a little bit on Monday. So we're running into some resistance here in the S&P, a little bit of a wedge pattern, overhead resistance, rising trend line from July 26th, staying contained there. As long as we stay contained within that into the close today, I do expect this market to come back in to start next week. The Nasdaq as well, it's hit that 15,134. We had some added resistance, 15,200. All of that's contained. Now the Russell as well, contained within those spike highs that we've seen. That opening range high as well kind of stayed within there and rejected it pretty quickly. So overall, I think there's some exuberance behind this report, but when it sinks in and it's going to force the Fed's hand here to taper, I mean, they have no reason to push back at this point. Then I think we do come in a little bit. So stay cautious if you are long into the weekend and look for this market to pull back here to start the week. Now, lastly, you have to look at CPI data next week, too. Does that further support the taper? I would expect CPI data to be a little on the softer side relative to previous numbers, just recent months, due to that pace of change being tough to stick with. Now, crude oil, too, it's come in. It's also, encouraged inflation to come in. Now, crude oil is battling at 68.5. It's a level we had on the Morning Express. It pinged 70, almost got up to major 3-star resistance. Coming in a little bit, you have the geopolitical tensions lifting things, but the fear of COVID is really, overall keeping the demand destruction picture in there and holding this market from rallies. And then gold and silver, they have just fallen flat on their face. There's some support at gold at 1763, but this is a really ugly move here in gold and silver. Kind of got to get out of the way and see from here what they're going to do. I would like to be a buyer lower. The dollar's back up, the index pressing 93. Treasuries are moving lower. I think we have a bottom in yields for now, and that's going to move up towards 1.5%. So it's all going to weigh on gold. I think of a better spot to buy gold. But let's see how things shape up into the weekend, through the weekend, and Monday, and where these markets are. Give us a call. Our trade desk is here, 312-278-0500. Remember, though, futures trading involves substantial risk of loss and is not suitable for all investors.